For more on the latest inflation data, let's bring in Robert Sockin, Citi's global economist. Rob, it's good to have you on. So the inflation numbers we got today, obviously slight downside to the core rate, but really on trend. And that trend is above target, but still kind of feeding into this general disinflationary mood. How do you read it?
Yeah, I think that's a perfect description of what we've been seeing, where inflation has continually run above the central bank's target, but we are seeing this gradual downward trajectory, which leads us to believe that maybe by the end of this year, you might not be exactly at 2%, but you're going to be somewhere in the vicinity of that by the end of 2026. Now, I should note, the data that we've been getting over the last few months are difficult to interpret because of distortions due to collection during the government shutdown, which was impaired or limited. But I think if you smooth through the last few months, even given those factors, it's pretty clear to us that inflation, while still high, is coming in better than we would have expected a few months ago and reinforces that view that we're going to be on a downward trajectory in 2026.
And the market, of course, has not been registering a lot of alarm about the inflation picture. On the growth side, obviously the consensus is for a bit of a reacceleration in U.S. GDP after maybe a late 2025 soft patch. Are you in line with that thought? And what are we looking for to actually have that bear out in terms of the data?
Yeah, absolutely. And I think, we had probably a bit of a modest slowdown in the economy in the fourth quarter of last year. We'll see when the full set of data comes through. But when you smooth through that and you look at 2025 as a whole, the U.S. economy probably grew somewhere around 2%. And we're looking for something very similar in 2026 of growth around 2%, probably a bit of a strength in the middle of the year as you get some of that fiscal support coming through the tax relief that we saw from the big, beautiful bill that's going to come through in tax returns this year. So we're watching those closely. How are refunds coming in? And most importantly, we're watching, how well does the consumer continue to hold up in this environment? The consumer has really been the backbone of the U.S. economy. Particularly upper income consumers have weathered this environment well. And we're watching to see how well do those monthly figures of spending hold up as we move into 2026.
Are we going to remain in this world where, relatively strong GDP growth coexists with relatively soft labor market performance?
I think this is really the key question for the U.S. economy, because what we saw last year was a significant or meaningful softening in the labor market amidst still fairly solid economic growth. And there's a bit of a tension there and a bit of a decoupling. And I think that is probably going to continue to be the story in 2026. I mentioned that we're looking for 2% GDP growth, but we also think there's enough underlying softness in the labor market that you're going to see a bit more of a rise in the unemployment rate as we go throughout this year. It's not going to be to recessionary levels. It's not going to rise particularly sharply, but I do think there's a bit more softness still to come as labor demand continues to moderate amidst also moderating labor supply. So it's a challenging backdrop, but I think it's the environment we're going to be living in for at least this year, particularly when you look at the dynamics in the labor market. It's very much a low churn environment. We're not seeing those layoffs yet. That gives me confidence that we're probably not going to see a big rise in the unemployment rate. We're also seeing a very low hiring environment, given all of the uncertainties and prevailing challenges. So I think that's still going to be the story in 2026, just as we saw in 2025.